Howdy guys, this is Bobo again. In today's video we're going to be talking about a loan product that's become more popular in the last few years. It's become more available. It's called the DSCR loan, Debt Service Coverage Ratio. And we're going to talk about when to use it, why it's become more popular, and who it'll be good for. So it's a great loan product for the right instance. So stick around and you'll learn about that loan. So DSCR stands for Debt Service Coverage Ratio, and what that means is if your debt is one number, how much rent are you getting compared to that number? So if your debt per month is $4,000 and your total rent on the property is $5,000, you divide those into each other and you get 1.25 would be the number that they're looking at. So it's a 1.25 service coverage. And so in the commercial real estate world for a long time, this is one of the numbers that they look at when they're trying to qualify somebody to buy a property. In the residential world, as far as 4 units or less, it hasn't been popular in the last decade or so. Most commercial lending companies and banks and credit unions didn't offer this type of product because there's cheaper products that are what they considered at the time to be safer for them, where they're really looking at your credit and your income and they want to make sure that you qualify for this property. Well, now there's a lot more money in the market than there has been for a long time, and there's a lot of equity in the real estate market, and for whatever reasons they decided that they're going to start offering this for small investors. For usually it's still 1 to 4 units, but the difference is instead of, like, if I go to the bank today and wanted to qualify for a regular conventional loan, they want to look at everything. They want to see my taxes, they want to see my credit, they want to look at all of my leases, and I have a lot of rental properties, so I got to find all of my leases, all of my insurance policies on all of these properties. They want to see my taxes, which are fairly confusing because there's a lot of things going on. They need to dig through everything with a fine-tooth comb, and in general, that's just not possible. Most underwriters are not going to be able to get through a professional investor's taxes and qualify them at the end of it. So what's awesome about a DSCR loan is they qualify you differently. So say you've got like thousands of rental properties, obviously you're not getting all that paperwork through an underwriter in a reasonable amount of time or at all. So what they're looking for is they're looking at the property, they're making sure that its value is right. They're doing that with an appraisal, that you're not buying a $500,000 property for $800,000. So they're gonna do the appraisal, they're gonna look at your credit and make sure that you pay your bills. But instead of looking at all your taxes, they're gonna look at the debt service coverage ratio. Obviously, if you've got a bunch of real estate, you probably know what you're doing, and if the property itself makes more money than the mortgage, they'll lend. So every loan program and people who are giving out these loans, they're gonna have their own requirements for it. It's not like it's blanket across the board, but some of them wanna see a 1.0 and some of them wanna see like a 1.1 or 1.25 debt service coverage ratio. So if it costs you this much to have the mortgage, they want to know that you're making that much or more per month. And if it's tighter, if their ratios that they want to see is 1.25 and you're at like 1.2 or 1.15, they might still offer you the loan, but they need to make sure it's safe for them. And so what they'll do is at the different ratios of debt service coverage, they're gonna offer it to you maybe at a different interest rate, but more commonly with a different down payment percentage. So unlike an owner-occupied loan that you can get into sometimes for 0 down and usually for 3 or 5% on an owner-occupied loan, these are designed for investments, and they're usually going to want 25 or more % down. Now, don't hold me to that. Everybody's got their own parameters, but they think if the property's making enough money to cover the mortgage and you're putting 25% down, which is usually 6 figures or more, that this is a pretty safe bet for them. Because if you default, they get the property back and get to resell it, and they know that it's making enough money to pay the bill in the meantime. So it's a pretty safe bet for them, but if it's a little tight, they'll just offer you less money in the form of you're gonna bring more down payment. Less conventional style loan like this, the interest rate and the fees are a little bit higher. It's something I'm willing to pay for the ease and convenience. I talked on my negotiating video where price isn't everything. A lot of times convenience matters. I will pay for convenience, and so will most other people. It's not like it's super easy, but it's way easier than getting a regular conventional loan. As far as who offers these, you can check with your local banks and credit unions, or you can just Google DSCR loans. You're not going to find them it like every run-of-the-mill lender. You might have an awesome local lender that you like to work with on your normal purchases, or that you bought your primary residence with. You can check with them. They may or may not offer them, but there's more people coming around offering these now than there were even just a few years ago. You can reach out to me. I can send you who I've used. I've closed 3 DSCR loans in combination with my BRRRR deals I've been doing. You can check out my video on BRRRR deals, and 3 in the last year that I've done with DSCR loans. So reach out to me if you need any help or any further explanation. Of course, if you're looking to buy or sell a house, or you see something that that needs a lot of work and you're in my area, give me a call. Love to help you with it. So these types of loans are good for investors that want to buy properties that might have complicated taxes. Maybe they're self-employed, and they don't want to bring in all their different leases and all their different taxes, and their properties change. I buy and sell quite a few properties every year. So in the middle of the process of getting a regular loan, they would want my new settlement statement and my new insurance policy and my new lease for the property that I just bought, and then I'll sell one, and then they'll have to redo all that. So I buy and sell too many properties to qualify for a regular conventional loan. If you're in that boat or near that boat, or just don't want to do as much paperwork, the DSCR loan is a great way to avoid that. The cons, of course, are that for a less conventional style loan like this, the interest rate and the fees are a little bit higher. It's something I'm willing to pay for the ease and convenience. I talked on my negotiating video where price isn't everything. A lot of times convenience matters. I will pay for convenience, and so will most other people. It's not like it's super easy, but it's way easier than getting a regular conventional loan. As far as who offers these, you can check with your local banks and credit unions, or reach out to me if you need any help or any further explanation. Of course, if you're looking to buy or sell a house, or you see something that that needs a lot of work and you're in my area, give me a call. Love to help you with it, and happy investing. So please subscribe to our channel, like the video, leave us a comment. If you leave us a good question, we'll get back to you. We might even make a video about it. Really appreciate it. Thank you.